Good morning. This is the Perivis Daily Wrap at 7 a.m. on Thursday, the 5th of February, and the setup for Indian markets is steady but selective. Yesterday's trade was all about waiting for the Reserve Bank of India and rotating within the market. The headline indices ended slightly higher, but the leadership was clearly away from technology. Here is where markets stand coming into today. Yesterday, the Sensex closed at 83,817, up just under 80 points. The Nifty ended at 25,776, up about 48 points. It was a narrow, choppy session, with the Nifty moving between roughly 25,564 and 25,819. The big picture from yesterday was a split tape. Power, utilities and energy names held up well, while information technology was the clear drag. On the Sensex, Infosys and TCS were among the steepest losers, with sharp single-day declines. That kept the broader move in check, even as other pockets stayed firm. For global cues, just two things to keep in mind this morning, because they connect directly to what Indian traders have been watching. First, the risk tone around technology has been fragile. Reports yesterday highlighted a tech-led sell-off on Wall Street, feeding into Japan's market, and that pressure showed up in Indian IT as well. If that theme persists, it can keep the IT heavyweight trade defensive again today. Second, geopolitical tension in the Arabian Sea was in focus after a report that the United States Navy shot down an Iranian drone headed toward an aircraft carrier. That does not automatically translate into a single market move, but it is the kind of headline that can quickly show up in oil sensitivity and risk appetite. Now turning to the key developments since the last market close. The main domestic driver remains policy anticipation. The Reserve Bank's interest rate decision is scheduled for tomorrow, February 6th, and that matters because yesterday's market action looked like positioning ahead of that event rather than a high-conviction directional bet. Another important thread is foreign flows. Exchange data cited in yesterday's reports showed foreign institutional investors turned buyers, with net purchases of about 5,236 crore rupees on Tuesday. That flow helped the market recover from early weakness yesterday, even though the close was still nearly flat. On the data front, the latest PMI readings kept the growth mood constructive. The HSBC Services PMI Business Activity Index was reported at 58.5 for January, up from 58.0 in December. The HSBC Composite PMI Output Index was reported at 58.4, up from 57.8. What stood out was not just the level, but that the tone stayed expansionary, even as cost pressures were also noted as firmer in parts of the survey. In currencies, the rupee was reported weaker against the US dollar yesterday after a sharp rally in the prior session tied to the India-United States trade deal headlines. The report attributed the dip to suspected dollar buying by corporates and importers. For today, the practical takeaway is simple. Watch whether the rupee steadies, because that can influence sentiment in rate-sensitive and globally linked sectors. Now on trade and geopolitics, the India-United States trade story is still moving through the market, but the euphoria appears to be fading into a wait-and-watch phase. Reports said US President Donald Trump decided to slash tariffs on Indian goods to 18%, while noting that Section 232 tariffs in steel of up to 50% remain unchanged. Finance Minister Nirmala Sitharaman, in comments cited by the report, expressed optimism that the tariff cut is positive for exports, with details expected to be announced soon. And from the industry side, Indian Steel Association President Naveen Jindal said a stronger trade partnership with the United States could improve input security for domestic steel, while pointing to deeper collaboration on coking coal as a tangible opportunity. The numbers cited were meaningful. The United States supplies around 9.4 million tons of coking coal, about 15% of India's total imports, and India still meets a large share of its coking coal needs through imports. Meanwhile, there was also a separate trade signal out of Europe. The European Union ambassador to India was cited saying the India-European Union Free Trade Agreement is undergoing legal scrubbing, with a possibility of coming into force this year. That is not an immediate trading trigger, but it is part of the broader narrative that trade links are expanding beyond one corridor. Now turning to corporate and policy signals and starting with the results that matter most for today's tape. We will keep this to 3. First, Aditya Birla Capital reported a strong quarter. The company posted a jump in consolidated net profit for the December quarter, up about 33% year-on-year, with consolidated total income also higher. The key point for the market is the direction of earnings momentum in a large financial platform, especially with the Reserve Bank decision due tomorrow. Second, Bajaj Finserv reported a marginal decline in consolidated net profit year-on-year for the quarter, even as consolidated total income rose sharply. The headline numbers suggest stability rather than acceleration, and traders may focus on the mix behind income growth versus profit delivery. Third, Castrol India reported a drop in quarterly net profit of about 10% year-on-year, even though total income rose about 6%. That combination, higher revenue but lower profit, is the kind of print that tends to raise questions on margins, and it can shape how investors look at the broader consumption and auto ancillary supply chain. Beyond earnings, there were several corporate action and order flow updates worth tracking for sector-specific moves today. Bharat Heavy Electricals, or BHEL, reported a letter of intent from Hindalco Industries with an indicated value of roughly 1,200 to 1,500 crore rupees, excluding tax, for a 2 by 150 megawatt BTG package. This is the kind of order headline that can support sentiment in capital goods, particularly when the market is already rewarding power and energy-linked themes. Indian Renewable Energy Development Agency, IREDA, said it is planning to raise up to 2,994 crore rupees via a qualified institutional placement, with its board scheduled to consider and approve it on February 6th. For today, that is a clear watch item in the renewable financing space because fundraising plans can affect near-term supply and positioning. Zydus Life Sciences received tentative approval from the U.S. Food and Drug Administration for dapagliflozin tablets in 2 strengths, with manufacturing at its Ahmedabad CES facility. The report cited very large annual sales for the reference market in the United States. The biggest signal here is pipeline execution and regulatory progress, which can influence sentiment even when the broader pharma index is not leading. Mahindra & Mahindra was reported set to deliver 35,000 units of Scorpio pickup vehicles in Indonesia in 2026 to an Indonesian state-owned enterprise tied to a logistics and cooperative project. That is a sizable overseas delivery headline, and it reinforces the export and international order narrative in autos. Devyani International's board approved the acquisition of an additional roughly 11.4% stake in Skygate Hospitality for about 5751,000 INR through a mix of cash and preference shares. On completion, Skygate would become a wholly owned subsidiary. This is a cleaner control story, and it can be read as consolidation in the quick service restaurant platform. Newgen Software's Dubai subsidiary signed an agreement with a large government organization in the UAE for licenses, implementation, and support services with an aggregate value cited in dirhams and a 3-year completion horizon. It is not a single quarter earnings swing, but it adds to the steady pipeline narrative for enterprise software exporters. Greenply Industries approved further investment of up to 125 crore rupees into its wholly owned subsidiary for expansion of MDF manufacturing capacity in Vadodara, to be done in tranches across multiple financial years. This is a capex signal, and it is relevant for investors tracking housing and interior-linked demand. There were also a few smaller order and expansion updates in the broader market, including Advait Energy Transitions winning a transmission-related order and Rashi Peripherals approving a step-down subsidiary in the UAE. These are more stock-specific, but they add to the day's corporate flow. Now, what will markets watch today heading into Thursday's session? First, positioning ahead of the Reserve Bank decision tomorrow will likely stay the dominant driver, especially for banks, non-bank lenders, and rate-sensitive sectors. Second, watch the rupee and any follow-through from yesterday's move, because currency direction can quickly shape leadership between exporters and domestic cyclicals. Third, keep an eye on the trade narrative with the United States. The market has moved from celebration to scrutiny, and the next leg will depend on details details and implementation, not just headlines. And finally, watch whether the IT sell-off stabilizes. If technology remains under pressure, it can cap index gains even if the broader market holds up. To close, yesterday's message was clear. The indices were up, but leadership was narrow, and the market is still waiting for policy clarity. For today, expect attention to stay on the Reserve Bank countdown and on stock-specific moves driven by earnings and order headlines. That is the Perivis Daily Wrap. Thank you for listening.